नमस्कार दोस्तों, morning everybody. I Tushar Jain, CF and Research Head of Ajay Money Guru. Welcome all of you today on 23rd September 2021. Sorry, 2022. In this episode, we will discuss about Indian stock markets and what all things you need to consider for next few trading days. So let us first look at the global sentiments. As yesterday also, the U.S. markets fell, and great uncertainties and selling pressure can be seen throughout the globe and throughout the world, and in major global leading economies. And as if we see the U.S. market, they are continuously falling after the Fed remark made day before yesterday. And also, if we see the Asian markets, they are also underperforming. And if we see the Hong Kong, it has crossed its 52-week low, and it is down by more than 40% from its 52-week high. But still, Indian markets were showing significant strength. But from since yesterday, the Indian markets are also breaking down because of the global sentiments. And if we see the Nifty and Bank Nifty also, they are showing weakness in today's markets also. Bank Nifty is down by around 500 points, and Nifty is down by around 125 points. So now the Indian markets are also reacting to the global markets, and they are also showing profit booking after showing a good strength of around 1 to 2 months. And if we see the FIs and DIs data also, we can see that FIs have sold around 2,500 crores worth of stock in net in cash market in the yesterday's session. So now the FIs are also selling as compared to their buying streak from last 2 months. So this is the overall global and domestic trend. But still, if we see the Indian markets, they were showing strength, but now they are also reacting to the global markets. So it is a matter of concern for the Indian markets now, since they were outperforming the global markets. And whenever this situation comes, uh, whenever the breakdown happens, it happens cumulatively. And also, if we see the USD INR, that is the Indian rupee, hit fresh time low, and it traded above 81 rupees per dollar in the yesterday session. So all these parameters, all these uh, news, or all these factors is leading Indian market to break down, and significant pressure and profit booking can be seen throughout the Indian markets. Now, the question is whether the Indian market will continue to break down, or uh, it will make a bottom and reverses from its bottom, or this breakdown is expected to continue. Although if we see the long term perspective is still positive, but for the short term perspective, for 2 3 trading days, it Indian markets can show some weakness. And as we can see on the screen also, the Nifty and Bank Nifties are also showing significant downward movement. So it will be better to hedge your position by buying Nifty or Bank Nifty put, so that uh, if the market fall more from the current levels, your losses will be recovered from the profit of the put. And if in case the market reverses from it, then the small amount which you have spent buying the put option will get vanished off, but it will act as an insurance for your funds. Therefore, it will be better to buy either Bank Nifty put or Nifty put. And if we compare Bank Nifty to Nifty, it is showing more downward movement as compared to Nifty. So we can consider buying Bank Nifty put uh, only to hedge the cash positions. So it is also advised to not to go for speculative trade by simply buying the Bank Nifty or Nifty puts but it is advised to hedge your position by buying Bank Nifty put for the weekly perspective. And since the overall markets are showing weakness, as you can and if we see the uh, indices also, then the almost all indices are showing weakness except uh, uh, pharma sector and healthcare sector. Apart from these two indices, all indices are showing significant downward movement, and as you can see on the screen also, these are the various indices of the of India. So now coming back to the Nifty and Bank Nifty, Bank Nifty is expected to show some more weakness. If you remember in our yesterday's episode, I have recommended that Bank Nifty can show some weakness, and exactly things are happening. Although in the yesterday session, the Bank Nifty was giving mixed signals. Sometimes it was showing weakness, and sometimes it was showing positive move. But at the end, uh, it at the end it is showing some weakness only. So this is the overall trend for the Indian markets. Uh, for the short-term perspective, the overall trend is expected to be weak, and it is advised to hedge your position by buying some Bank Nifty put. So that's all for the today's episode. I hope you liked our analysis. And also you should go through our standard disclaimer also, that uh, all this information and research are purely for educational and research purposes only. So have a good day. Thank you.